All right, we're about to tackle a question that affects every single one of us, but it's way trickier than it sounds. What is taxable income? Here's a hint for you. It is so much more than what you see on your paycheck.
Let's just kick things off with this quote because it really says it all. If you see two quarters and you pick them up, the IRS will still want their cut. Now, that sounds like a joke, right? Kind of like an exaggeration.
But here's the thing, it's not an exaggeration. Not really. It's actually a pretty good way to understand a core principle of the US tax code, which is that the IRS has an incredibly broad, almost all-encompassing definition of what it considers income.
So, to get this right, let's go straight to the source. Let's look at the official definition from the agency that's actually in charge of collecting the taxes, the IRS. What do they say income is?
And you can see right here just how wide that definition is. For the IRS, income isn't just about cash. Nope. It's broken down into three big categories. Money, which is the one we all think of. Then there's property, meaning basically anything of value you get, and even services. So this next part is absolutely crucial. You have to completely flip your thinking. Most of us ask, is this taxable? But you need to start with the assumption that everything you receive is taxable. And then, and only then, do you look for a specific law that says, okay, this one's an exception. That's the default rule. And just when you thought it couldn't get any broader, it does. You see, you don't even have to have the money physically in your hand for it to count as income. The IRS has this concept called constructively received income. All that means is if the money is available to you, it's considered yours for tax purposes. You know, the classic IRS example for this is a check. Let's say a client mails you a payment. It arrives in your mailbox on the afternoon of December 31st. But you're out celebrating, you don't even see it until January 1st. Well, too bad. The IRS says because that check was available to you in that mailbox, it counts as income for the year that just ended. Okay, so we know it's more than cash, and you don't even have to touch it for it to count. But what about all those other perks you get from your job? This is where we get into the world of fringe benefits, and honestly, it can be a real minefield of taxable and non-taxable items. This is where understanding your real compensation gets super tricky.
And this is a perfect example of that whole rule and exception system. Over on the left, you've got things that are almost always taxable income. Your bonus, for sure, any financial counseling your company pays for, even that gym membership. But on the right, you got the specific exceptions that are written into the law. Things like health plan coverage, de minimis benefits. That's just a fancy term for really small stuff, like the coffee and snacks in the break room. And even some educational assistance.
And get this. Even the exceptions have rules. Take group term life insurance from your employer. That's a non-taxable benefit, right? Well, yes, but only up to a point. The cost of any coverage over $50,000 is considered taxable income to you. Okay, let's have a little fun with this. To really hammer home just how incredibly broad this definition of income is, we're going to do a quick rapid-fire round of some of the more surprising things the IRS wants its cut of. You ready? First up, let's go right back to our opening hook. You're walking down the street, you look down, and boom, a $50 bill. Is that income? You bet it is. Absolutely. The IRS officially calls this found property. And just like that quote said, they consider it taxable income. All right, next one. Let's say you're a freelance graphic designer. Your accountant needs a new logo, and you need your taxes done. You just agree to swap services. No money changes hands. Is that a taxable event? It sure is. The IRS calls this bartering. The fair market value of those accounting services you got, that's income to you. And by the way, the fair market value of the logo you designed, that's income to your accountant. It's a taxable street that runs both ways. Okay, how about this? You've got some credit card debt, and after some back and forth, the company agrees to just cancel or forgive $2,000 of what you owe. Is that income? That's right, it is. From the IRS's point of view, you just received an economic benefit of $2,000. This is what's known as canceled debt, and yup, it's generally considered taxable income. Okay, last one for our rapid-fire round. You absolutely crushed your sales goal at work, and as a prize, the company gives you an all-expenses-paid trip to Hawaii. Is that free vacation considered income? Oh yeah, it is. The IRS is very, very clear the prizes and awards are taxable income, and they're taxed at their fair market value. So while the trip itself might feel free, you're going to owe taxes on what it was worth. So, enjoy those Mai Tais, but maybe set some cash aside for Uncle Sam.
So we've seen just how wide the IRS casts its net. I mean, it seems to catch just about everything, but it doesn't catch everything. There are specific, legally defined holes in that net, the exceptions to the rule. So what are some of the things that are generally not income?
Well, here are some of the big ones. Gifts and inheritances, generally tax-free to the person who gets them. Same thing for life insurance proceeds that are paid out because of a death, child support payments, workers' comp, and those cash rebates you get from a manufacturer when you buy a new car. The IRS sees that as just a reduction in the price, not as new income. So, after all of this, what's the one big takeaway? What's the new mindset? It's exactly what we've been talking about. You have to stop hunting for reasons something might be taxable. Instead, assume everything of value that comes your way is taxable, unless you can point to a specific law, a specific exception that says it's not.
Which really leaves us with one last question to chew on. Now that you have this powerful new way of looking at income, think about your own life. That little side hustle, that barter deal you made with a friend, that prize you won at the company picnic, what might you have overlooked?